On the live stream today, we made a killing in the first 5 minutes. We ended up getting Wednesday NASDAQ contracts, and those ended up going to 40% within the first 10 minutes of the market. So that worked out really, really well. And if you bought the daily contracts, those were up over 100%. So in today's video, we're going to talk about why this is so important that the NASDAQ is opening and closing outside of the lower level of the Bollinger Band. We're going to talk about the SPY, the IWM, as well as the crypto markets. So without further ado, let's get started with the video. All right, so I went back in history, back to 1990 on the NDX, which is the NASDAQ 100. And there were 72 instances where we opened and closed outside of the lower Bollinger Bands. So what I did was I compiled a list of data here that basically shows how much percentage gain we would have had the day after this occurred. Okay, so it isn't a close of the next day's candle, it's the percentage high that we could have potentially gotten for the next day. So for example, on February 17th, 1993, I don't remember exactly if it was a close of 2.7%, but we ended up shooting up 2.7% intraday the next day. So basically what I wanted to see from this data is what are the odds that tomorrow will be a good, healthy green day. And what we found here is there is an 86% chance that tomorrow should be a good green day, according to the last 72 times that this happened. So there were 5 times in history out of the 72 that just automatically gapped down, and those were just straight red. So the next day just was automatically red, right? But even for those days that gapped down, the second day afterward, some of them ended up being a very, very good dip buying opportunity. So I'm not even going to go into the further days. I'm just talking about the next day immediately. So the equivalent of tomorrow, right? So essentially, there was a 7% chance, according to the past, that we'll just gap down, right? And then there's another 7% chance that we open either flat or we remain flat the day, or we only go up about 2%, 0.2%, 0.1%, or 0.1% really. So even those small gains like that, I still consider it a loss. So essentially out of those days, 62 of them were a high likelihood chance that we would end up bouncing strongly the next day. So here we are on the NASDAQ. Massive, massive support here at 302 on the NASDAQ. And we can see that we're clearly opened and closed outside the lower Bollinger Band. So depending on if tomorrow we also open and close outside of the lower Bollinger Band, sorry, if we open tomorrow outside of the lower Bollinger Band, ideally, guys, what we really want to see is us to open red. That would be one of the best opportunities, in my opinion, because that would basically mean that we can have a very, very strong bounce to the upside. But yeah, I'm hoping for more red, honestly, so that we could buy the dips. But the way that, you know, the market and everything is looking, we might just end up opening green. But essentially, my main targets to the upside are basically going to be above 308 on the NASDAQ. So once we hit 308 to 310, I'm going to be more comfortable taking profits. So I bought into so first of all, I alerted into Wednesday and Friday expiration calls. Those ended up going up 80% after the stream ended. And then at the end, I alerted September 9th or September 2nd QQQ calls. So essentially we got some time on those, and we got 311 calls. So the reason for that is because even if tomorrow we end up falling lower, it's not going to be a huge deal because I entered light and I want the market to fall lower tomorrow as well, so that we can get in a bit heavier, in my opinion. But these September 9th, 2011 or 311 calls, if we end up bouncing to 307 to 308 tomorrow, those same calls are going to be up at least 200 to 300%. So we're essentially risking 13% chance that we'll end up being red, and I mean, overall, this is a very, very good, healthy trade. So it works out in our favor, regardless of the percentage loss that we would attain if the market does gap down a bit. It would only be about 30%. So we're risking about 30% for a gap down because we got a few days. We got like a longer dated contract. We'd be risking about 30% in exchange for a potential 200 to 300%. So I think, and the fact that this is an 86% chance success rate that we end up going higher the next day, I think that this is a very, very good longing opportunity for today as well as tomorrow. And I just really am truly pretty excited, hoping that we do bounce. The statistics are in our favor, but of course, we never ever full port, and we never ever overextend our portfolios to a point where we put it in any like danger, because trading is an infinite game. As long as you can preserve your capital, you can keep on taking trades. But this is a very, very high reward, lower risk trade, and we're executing it pretty perfectly, in my opinion. So even if this doesn't work, you have to take these because the odds of it working is so high. So there's that for the NASDAQ. Let's go ahead and take a look at the SPY. So we can see that the SPY is right at this lower level of the Bollinger Band. It's not as overextended to the downside as the NASDAQ. A few videos ago, I was explaining how the NASDAQ was the biggest loser, and how the SPY and how the IWM was the biggest winner, and the SPY had strength because of the IWM. So we can see that the SPY is still holding above 402, and it's hovering around that 403 demand zone. So and it's still holding 400. So yeah, I'm not sure if they bring the market down, but regardless, what I want to see is for these lottos to basically turn green tomorrow, and the odds of us being green at all is 86%. So it's a good chance. And essentially, once they turn green, I'm going to probably not allow them to turn red, and it should be good. So for the SPY, we can see that it's still holding within the Bollinger Bands. Let's take a look at the IWM, and the IWM is much higher than both. It's over, it's leading the market currently in terms of strength. So this is a good sign for bulls on the IWM. But yeah, really, that's essentially what I wanted to show you guys. Tomorrow is really going to be dependent on how we open. We have to watch the futures. The futures opening very soon is going to be very, very interesting. And yeah, that's going to tell a lot. And essentially, the two times that this happened this year were my biggest trading days, because we played that the bounce intraday, but we didn't get that good of a bounce intraday today. We ended up closing outside of the lower Bollinger Band. So we have to keep an open mind that this isn't an automatic 100% chance that this can work. All right, there's still a 13% chance that we won't make a crazy amount of money. That's why it's very, very important, regardless, that with the position that we're buying with, it's something that we're willing to lose. And I mean, yeah, it's worth taking a stab at these plays with such a high success rate, even if it doesn't look that good on paper to people. And if like things look very, very bearish, the market could continue falling lower tomorrow, blah blah blah. But that's the data, so it is what it is. So yeah, that's what we do. We follow the data, and we trade accordingly. So there's that for the stock market. Let's go ahead and take a look at the crypto market. All right, and now we see Bitcoin is basically consolidating potentially for another leg down, but essentially it's holding this level of support and it's bouncing. Essentially, just very plainly, we basically just need a break above 20,600, and then we need to start comfortably trading above 21,000. But essentially, really, you could take a long here with like a stop loss. I know a lot of people bought these dips here in line with like the overextension in the stock market. So this could pose overall, guys, this is still very bearish, right? Obviously, this is still a very bearish market. So I'm not automatically bullish, but when we are this overextended to the downside, we have to buy into calls. So it makes sense to basically play the support zones on Bitcoin and be bullish on the market while the market is basically showing the strength in the short term, in the day-to-day. So what happens afterward, you know, you can scale into longer term puts and basically hope that we get these bounces in Bitcoin and the stock market, etc., so that you can scale into your puts again at a cheaper price. So I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.